Hello everybody, welcome to another video with Maths with Zair. As I said earlier, we will not only be focusing on maths, but we'll be focusing on other topics, other subjects as well, like accounting, and we'll be adding more and more, uh, courses, subjects as we go along, because our main motto is to make learning fun for you, the students. Today, we're talking about accounting chapter 2. We've already done chapter 1. So, if you want to go back and look at it, go ahead. Now, when we talk about the dual effect or the double entry system, that means that anything that you record in accounting has a dual effect. Something goes up and something might go down, right? For example, if you buy inventory by cash, so your bank account or your cash account might go down because you have to pay for it, and your inventory is going to go up. Similarly, both things might increase. For example, if you buy inventory on credit, the amount that you owe to your creditors will also go up, as well as the inventory that you have also goes up. So this is actually known as when you have to record a entry twice. This is actually known as a double entry system in accounting, and it's very important. Okay. Now, when we talk about the double entry system, we talk about debit and credit. We'll eventually come to an example where we talk about how we record debit and credit. Now, here's just something I want you guys to go over, right? When assets increase, it's actually called debit, and when assets decrease, it's called credit. When liabilities like creditors, bank overdraft increase, it's actually recorded on the credit side, and when it's actually going down, it's recorded on the debit side. Similarly, it's the same thing for capital. When any increase in capital is actually recorded on the credit side, and any decrease is actually recorded on the debit side. That's because the capital is like a liability of the owner to the business. So because the business owes money back to the uh, sole proprietor or the partner, right? And when you talk about revenue, an increase in revenue is actually credited, a decrease in revenue is actually debited. Similarly, when we talk about a increase in expenses, an increase in expenses is actually debited, and a decrease in expenses is credited. I'm just going to leave this here for some while so you guys can just look at it, because this is a very important slide. Our trading profit and loss, our balance sheet, our T ledgers, that's all going to be based on this slide of ours, right? Now, let's look at this. When we record the double entry system, here's an example. So if you have, Ani started a business with 100,000 and, 100,000 cash. And we have other transactions. So let's look at the first one. He starts a business with 100,000 cash, right? So now let's look at this. So we have cash debit, capital credit. As we said earlier, when you increase your capital, that is credited, and when we decrease, I mean, when we increase your capital, that is credited, and when we increase cash, that is debited, right? Okay. Now, we bought furniture. We bought furniture for 7,000 in cash, right? So furniture will actually go up by 7,000 because it's an asset, and cash will go down by 7,000 because we paid for it, so it's going to be credited, right? Furniture debit because furniture or asset is going up, and our cash, which is also our asset, is going down. Look at this. Number 3, which is uh, April 8th, we purchase goods on cash and credit, right, from Khaled retail store. So when we purchased it, our purchases or inventory went up, so that is actually going to be our inventory is going up, so our purchase is going to be debited, right? And our cash, because we paid for it by 2000 cash and 1000 on credit. So 2000 is actually gonna, from our cash is gonna go down, and 1000, obviously our credit is going up. So that's been credited, right? Okay. And we bought cash and credit sales recorded. Okay, right? So now what happens is we've bought further uh, okay, now we haven't bought anything, but we've actually sold. So our inventory is going down, so our sales is actually being credited, and we've actually it was a 17,000 transaction. They paid us 5,000 cash, and the rest they said we'll pay you later or on credit. So 5,000 cash we will receive, so that's debited, and 12,000 our debtors have gone up, which is also an asset. So that's also debited. Okay, we took our drawings. Now, when we take our drawings, drawing is the app or is the opposite of capital, right? So any increase in drawings is going to be debited. So there's an increase in drawings of 2000, and cash is going to be credited because obviously we've taken it from our company account. So our cash is going down, but since drawings is the opposite of capital, so an increase in drawings is going to be debited, right? And there's obviously no decrease in drawings, so that we don't record that. So any increase in drawings is debited, right? Account payable. Now this guy we paid by cash to our owing, right? 500. So we paid our credit of 500. So our cash is going down, and our obviously our credit is also going down. So if credit goes down, it's debited. Now we received cash from a credit customer, right? 10,000. So when so our cash is going up by debit. So when our cash goes up, it's debited 10,000. And when our debt is going down, our asset is going down, right? That's a credit, right? Say a salary expense. We paid salary. Now, salary expense is a debit, right? Any increase in expense is a debit. So we paid our salaries. So we paid 3,000 in salary. So that's going to be debited. And obviously, cash is going to be credited because our cash is going down, right? So I hope you've understood exactly what the double entry system is. You can go back and forth with this exercise, and that's going to help you. So hopefully we'll see you with another chapter, hopefully with another topic and with another subject.